AMD stock closed Monday at just over $161 per share, climbing about 1.6% on the day. On the surface, that might look like a modest move, but underneath it sits a much bigger story. Analysts are warming up to AMD again. We're seeing upgrades, higher price targets, and a return of optimism that had cooled off during the sector's recent volatility. The question for investors is simple. Is this renewed analyst enthusiasm justified, and could AMD actually still be undervalued in the middle of the AI boom? To answer that, we need to zoom out and take in the context. Over the last year, AMD has been on a wild ride. The company has established itself as a legitimate competitor in AI accelerators, thanks to its MI300 MI350 products. Its server share has climbed steadily, now sitting at levels that would have seemed impossible just a few years ago, and its PC business continues to hold ground against Intel. Yet, despite those wins, the stock has struggled with sharp pullbacks, consolidation periods, and investor doubt. That tension between long-term promise and short-term uncertainty is what makes this moment so fascinating. Let's start with the analysts who've been moving the needle. Truist Securities upgraded AMD to a buy rating not long ago, lifting its price target to $213. They cited hyperscaler adoption and a growing willingness among big tech companies to integrate AMD hardware into their AI infrastructure. In their view, AMD isn't just a cheaper alternative to Nvidia anymore. It's a credible player with serious products and a maturing software stack. That's a big shift in perception, because for years, the knock against AMD was that it couldn't compete with Nvidia's CUDA ecosystem. But now, with ROCm improving and real design wins emerging, the conversation is changing. Then you have Melius Research, who also turned bullish, pointing out that AI workloads are diversifying. It's not just about training massive models anymore, it's about inference, efficiency, and scaling across data centers. That opens the door for AMD to carve out meaningful share, especially as hyperscalers look for cost-effective alternatives to Nvidia's premium pricing. When you think about cloud providers balancing performance with margins, it makes sense that they'd want a second source, and AMD is increasingly filling that role. But analyst support isn't just about optimism. It's also about valuation. Even after the rally earlier this year, AMD trades at a discount compared to Nvidia on forward earnings multiples. Some of that is justified. Nvidia's dominance in AI accelerators and its entrenched ecosystem deserve a premium. But the gap might be too wide given AMD's growth prospects. If the MI350 and eventually the MI450 series can capture even 10% of the data center GPU market, that revenue and profit stream would be transformative. Analysts are starting to run those numbers, and it explains why targets are being raised. Now, it's not all smooth sailing. Seaport Research recently downgraded AMD, arguing that AI adoption may not scale as quickly as bulls expect. They pointed to early interest from customers like Meta and Oracle that may take longer to translate into big orders. They also flagged the possibility that hyperscaler spending could slow as companies digest their massive AI investments from the past year. That view highlights the ongoing debate. Is AMD a rocket ship still fueling up, or is it running into turbulence? The truth is probably somewhere in between. AMD is clearly gaining ground, but execution risk is real. The company needs to prove that its accelerators aren't just competitive on paper but truly integrated into production environments at scale. It needs to keep building out ROCm so developers and enterprises see AMD not as the alternative, but as a viable first choice. And it needs to deliver consistently on revenue growth tied to AI, not just hype. Still, the fact that multiple analysts are raising their targets in the face of these challenges shows you the strength of the underlying story. The AI market is simply too big for one company to dominate forever. Nvidia will continue to lead, but hyperscalers don't want to be locked into one vendor. AMD's presence provides pricing pressure, supply diversification, and performance parity in certain workloads. That's a powerful trio. So is AMD undervalued right now? If you believe AI infrastructure spending continues to grow, if you believe AMD can capture and hold meaningful share, and if you believe analysts raising targets are more right than wrong, then the current price around the low 160s could look cheap in hindsight. Especially when you consider that some price targets are up in the 200s, suggesting significant upside. It's also worth noting how AMD has behaved technically. The stock has found support in the 158 to 160 range multiple times. Each dip has been bought, and each recovery shows institutional demand is real. That kind of price action usually suggests accumulation. In other words, Big players are building positions quietly while volatility shakes out smaller traders. If that's true, then these levels may represent a base for the next leg higher. Investors should also remember that AMD isn't just about AI GPUs. Its CPU business is still growing, its server share is expanding, and its PC presence remains steady. Those segments provide ballast. They may not be as flashy as AI chips, but they provide the earnings foundation that gives AMD room to invest in its AI push. When you combine a solid legacy business with high growth opportunities in AI, you get a compelling mix that analysts are increasingly recognizing. Looking forward, the catalysts are clear. AMD's Analyst Day in November will be closely watched for details on the roadmap, customer adoption, and revenue visibility. Any updates on the MI350 ramp, or even early chatter around the MI450, could be game changers. Analyst commentary will remain a factor, as each upgrade or downgrade swings sentiment. And of course, macro and geopolitical headlines will continue to stir volatility. But through it all, the long-term trend points toward AMD growing into its AI ambitions. So to circle back to the original question, is AMD still undervalued in the AI boom? The evidence suggests that it might be. The renewed analyst enthusiasm isn't coming from nowhere. It's grounded in tangible progress, shifting market dynamics, and a growing recognition that AMD is no longer a minor player. It's an essential part of the AI supply chain. If that trend continues, today's price will look like a discount compared to where the stock could be in a year or two. That doesn't mean there won't be bumps along the way. Pullbacks are inevitable. Skeptics will continue to raise valid concerns, and competition, from Nvidia, from China, and from new entrants, will remain fierce. But what we saw on Monday, with AMD climbing over 1.5%, is evidence that buyers are still stepping up. Combined with analysts going bullish again, it's a sign that the tide of sentiment may be turning in AMD's favor once more. For investors and traders alike, that makes AMD one of the most fascinating stocks to watch right now. It's a company straddling two identities, the challenger still proving itself, and the emerging leader carving out undeniable share in the AI boom. Analysts raising targets remind us that the potential is enormous, and that perhaps the stock hasn't yet priced in what's ahead. So as we move further into this week and beyond, the message is simple: keep watching AMD. The volatility will continue, the headlines will swing sentiment, but the deeper story is about growth, resilience, and opportunity. And that's why, even after a wild year, analysts are starting to believe again. The real question is whether the market as a whole will follow their lead.